Assalamu alaikum, grade 10s. We're doing today interest on overdue accounts, and we're doing interest on overdue accounts for debtors. Okay, so we're focusing on debtors, and I'm going to explain to you what it means when we have interest on an overdue account. So now I've copied the name in the example that I'm going to show you on your recovery work. So I've just written the name of the person, of the trader that they've written. So the company's name was ZZ Traders, and the person who's buying from them is G Scope. So he's the debtor of ZZ Traders. So if we follow this transaction, this debtor here, G Scope, came to ZZ Traders and bought for an invoice for 400 Rand, right? So on the 30th of September, I've worked backwards and just calculated the dates for the interest. So on the 30th of September, 400 Rand. So what it's telling him on this invoice here, that he has 30 days to pay. So this means from the 30th of September to the 31st of October, he must pay his invoice. If he doesn't pay his invoice by 30 days, after that here, interest will be charged for all the months that it's overdue. So now we are doing the books on the 31st of January. So if we're calculating from after that 30 days, his overdue account is for 3 months. So he hasn't paid for the whole of October, he hasn't paid for the whole of November, and he hasn't paid for the whole of December. And then it's telling you that interest is charged at 12% per annum. So that's very important, 12% per annum on overdue accounts. So what happens is, now for all this time that he hasn't paid after that 30 days that he's supposed to pay within, he gets charged an interest amount. So when we charge interest, we have interest income. So we're actually getting money coming into the business. So how we do the transaction? So for this one here, G Scoop will be charged interest. So we're going to debit the debtor, and then we're going to credit interest on overdue account. So this is an income. So it's increasing on the credit side and decreasing on the debit side. And this is an asset. So we are increasing on the debit side and we're decreasing on the credit side. So let's see how we're going to calculate the amount of this interest that we're going to charge him, right? So our invoice amount is 400 Rands. I've got that from the invoice that he bought for us. He came and he bought goods and he's owing us 400 Rand. The interest rate is given, right? It's given in the question to you. It's 12%, and what's very important is that it's per annum. The number of months is 3 months. So his account is overdue for how many months? For 3 months. In accounting, it's very important to learn the number of days in a month, because normally you're doing your journals at the end of the month. So you need to know how many days October has, November has, December, etc., right? So now we have 3 months that we're working with here. He's owing us interest for the whole of October. He's only owing us interest for the whole of November, and he's owing us interest for the whole of December. So how we're going to calculate it is, we're going to take our 400 Rand, we're going to multiply it by 12%. Now remember, if I've done this step here, I'm doing the amount per annum. So I've worked out, so if I take 400 Rand multiplied by 12%, on my calculator, 48 Rand will be my answer, but that's not the amount I'm going to charge him. I'm only going to charge him for 3 months. So what I have to do is I have to say multiply that by 3 and divide it by 12, which gives me 12 Rands. Okay, so what I've done in my second step is I've said 400 Rand times 12% is my amount per annum, right? So if I want to divide that by 12, it would be 4 Rand per month, and I have 3 months, which is 12 Rands. So how we do it, and how you need to remember to do it as an easy way in accounting, is you multiply it by 3 divided by 12. So this is telling you the number of months that he needs to pay. That's giving you your interest rate, and that's giving you your invoice amount. So when I do my calculation, this 12 Rand here, he's owing us for 3 months. So what has happened, we've worked out 400 times 12% per annum. Your interest is actually 4 Rands per month. So he owes 4 Rand there, he owes 4 Rand there, and he owes 4 Rand there. And that's how we are going to charge him on the 31st of January 4 plus 4 plus 4, which is 4 3s are 12, and this is the way you calculate it. You get your 12 Rand. So what is the transaction? We're going to debit our debtor with 12 Rand, and we're going to credit our interest income with 12 Rand. So your debtor is increasing the amount that he's owing you. Remember, there'll be an amount of 400 there that he owed you previously, right? Now we're charging him another 12 Rand. And where we're going to put the 12 Rand, we're not going to put it into stock or anything. He didn't buy stock. We've charged him for interest on overdue account. So this 12 Rand will be shown later on as an income in the income statement, and we'll do that later on. So this is very important, and this is part of your general journal. Okay, so it's a transaction that we're going to see now. I'm going to go through the general journal with you. So what we have done yesterday was bad debts, and now we're doing interest on overdue accounts. Now remember, we have interest on overdue accounts for debtors, and then we're going to do interest on overdue accounts for creditors. Now the debtors are owing us the money, and their accounts are becoming overdue, and we charge them an interest, and then that becomes an income for us. So you have to go remember this transaction here, and now we're going to go through the example in that in the work now.